From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon and welcome to the COB. I'm Kyle Rodder with my trusty, well, I would say sidekick, but not. I don't know what we call one another, but wing woman, maybe. I'm not too sure. Danny Akuye. How was your long weekend?
Yeah, very nice, thank you.
Yeah.
Very pleasant. Had a lovely
pleasant.
walk along a beautiful beach and saw some birds and water and nature, and how cool is that?
Indeed, and well, I suppose the markets are off to a good start this week as well. We saw the lead from Wall Street reasonably positive. Now, the CBO 200 doesn't really express, I suppose, the broad positive sentiment that we're seeing in global markets at the moment. But nevertheless, we did see it pick itself off an early drop, which was very much led, as we'll see in a few moments' time, by some of those cyclical names, maybe growth concerns coming through. But nevertheless, pushing higher, and there has been a move higher in US futures too this afternoon. Yeah, so everything seems to be pointed to the sky.
Yeah, well, there we go. And let's probably go to our three themes. Otherwise, I'll probably start talking about them before I'm meant to, which is what I normally do.
Well, let's go. Well, let's have a look at them, shall we? Three themes. Risk on, question mark. I feel like there is a lot of risk appetite driving sentiment at the moment. VIX at 3-year lows, February 2020. All these indicators that, people are feeling pretty good, at least on the surface.
Well, what I think is really interesting, so information technology here in Australia up, 3.7%. I was just chatting with Michael Howell about global liquidity and why we're seeing these assets, performing so well, and he remains really, really bullish. So the market is telling us that inflation is going to trend down, and these longer dated assets are really performing really, really well. And the central banks, by stealth, are putting money back into the markets.
There you go.
So, he can explain why, we're seeing information technology continuing to run higher.
Yeah, and it was great for our IT sector. Again, we'll look at those names in just a moment, but just on a few other stories, I suppose it'll be the final hurdle before the Fed meeting on, Thursday morning our time. It's that CPI figure tonight. So really we're just looking for a signal that that's coming down. Again, maybe just marginally. It's lower than perhaps expectations or even in line with expectations. And if that occurs, then, we could see a pause, skip, drop, hop. I'm not too sure which one to refer to it, but nevertheless, rates mightn't go anywhere for the first time in a little while.
Well, clearly, I think the market, apart from the whole pause and the skip malarkey that everybody puts a description on, I think it's just the general thematic that rates are going to start to, inflation is starting to ease. And we're seeing it in the oil price, aren't we? That really, really fell heavily overnight, didn't it?
It did, and our commodity players in the market were pretty heavily sold down today. So last but not least, we have to mention it very briefly, confidence.
Yeah.
It's been a long time that consumers have been in the doldrums. We've known that for the better part of a year. Interest rates go up, what do you know, people don't like it. But businesses are starting to express their dissatisfaction perhaps because that NAB survey was, the weakest it's been in a little while.
Yeah, absolutely. But it's not to be surprised, is it? I mean, we're all looking back now and saying, gosh, we didn't realise how strong the economies were last year, but equally now the slowdown is happening. And really, at the end of the day, that's what the central banks want, isn't it? They've only got one blunt tool to engineer a slowdown in demand. So, it'll be really important for all businesses to manage their cash flow through this cycle.
Yes, and obviously you had the good fortune of speaking to Jason Allen from McGrath Nickel about exactly that. So if you're a little bit more interested in, I suppose, the small, medium-sized enterprises and the commercial world, that's something you can look at on your platform. But we will get across some of the movers and shakers today. Let's start on the positive because it was the tech sector. Computer share tends to be a little bit more rate sensitive. Block, that's just a crypto play. But if you look at those more premium names on the
WiseTech and Xero, my gosh, they are on such a run, aren't they?
Yeah, $113 per share. I didn't see that.
But look, almost $80 for WiseTech.
Deary me.
Yeah, I wouldn't be surprised if that isn't an all-time high.
It 100% is. It was right on the cusp last week when we saw a pullback. So that's quite a milestone. And Xero's at highs not seen for 52 weeks. It's been a sort of a 30% rally now, I think, when from when it reported about a month ago. So things are looking very positive for our tech sector, just like they are on Wall Street. But the areas of the market that aren't so strong, of course, well, the miners.
Absolutely, not only the bulk miners, but also the gold sector undertaking quite a bit of profit taking as well. And I do know that, again, people like Mike Harless thinks this is a very good opportunity to start to look at gold again. And I guess we had a run up in those majors last week, didn't we, on hopes of a China stimulus package. So maybe just a little bit of profit taking coming in post that run up.
Yeah, and a similar story, energy stocks. Oil took a fairly significant tumble. I don't know what it was, 4 or 5% overnight or something in that realm.
I think it was around 4%,
Yeah, well, it was never a great backdrop to start the week for our energy players, and Woodside and Santos might be the best ones to look at there, down 1.4 and 2% respectively, but it stretches right across the energy complex. Whitehaven Coal is also lower. Beach Energy, a little bit more of a gassy kind of play, I guess you could say, also down as well. Amusing.
Sorry, just amusing myself.
All right, let's get across to some of the corporate stories of the day. I mean, I think the big one was just Domino's.
Totally.
Gassy, perhaps.
Totally. Yeah, no, I think the shares were, I can check, but they were off at one stage as much as 10%, but let's just have a look.
8% when I last checked, 6%.
6%, so buying come in, but basically management are coming in and really rationalising the global footprint of their stores, either closing them down, divesting them, or just trying to get rid of what is effectively those stores that are weighing on the profitability. So trying to get costs out of the business, and I do know that there was a broker downgrade to the stock, basically downgrading both full year 24, full year 25 earnings by 11 to 19%, if my memory serves me correctly, and putting it on a sell rating. And I think that was Citigroup that downgraded there. But it does look like people are actually losing faith, dare we say, in that growth story.
It is, and it seems now that it's not just mozzarella that's responsible for their margins. And if you saw that little peak over in March, that was, well, my best efforts when I moved places and right next to a Domino's to eat my way or eat the business through the vegan, eat them back into profitability. I try my best, people, but I can't do it anymore. And it would seem that we're heading south once again. It's been a tough ride for Domino's shareholders. But let's get to our stock of the day, perhaps.
Macquarie Telecom.
Macquarie Technology, a name that, well, perhaps will be a little new to a lot of people out there. But Mark Morland from Team Invest and Luke Winchester from Merryweather Capital had their say about Macquarie Technology.
Of over 100 times earnings. Now the problem with that is they're showing negative earnings. So the earnings growth has been negative 10.3% over the last 6 years. So earnings have been going down. The market's been kind to it, but it's been keeping the price up, which means the PE's been expanding.
Right.
And on earnings growth like that, 100 PE is absurd. And I can't see, and also their debt load is very high. They've got debt to equity 172% now. They had no debt in 2019 and prior to that. So the debt's been going up, but their debt at the moment on current earnings would take 28 years to pay off.
The market has been generous to it. I agree with Mark's view there. The reason why is I think the market's looking ahead to what this business is building and the earnings stream that will come through from the infrastructure-like assets that they're building. I don't own it with Merryweather Capital. I used to own it in a previous life. I think this is the sort of business I would definitely hold it. The main factor for why I would say hold, though, and be a bit more positive than Mark, is you've still got David Tudorhope, the MD there, who owns, even after this raise, he'll still own probably half the business. And I think he's got a very good, strategic view of where this business wants to go and needs to go. And he's very much aligned with shareholders to achieve it.
Okay, so maybe not Mark's cup of tea.
No.
It doesn't mind the look of it, though. So I guess that's one of those horses for courses situations. But,
absolutely.
Perhaps we'll ask our guest for the show whether they might have an interest in Macquarie Technology. Henry Jennings from Markets Today, thank you for standing by. I know you're a small cap guy, Henry, so on the off chance, have you ever taken a look at Macquarie Technology?
Certainly like it. Hi, Carl. Hi, Danielle. It is a good quality stock. They're pushing into data centers, and that's why they've changed their name to Macquarie Technology, as opposed to the old name, of course. This is the first raising they've done since listing in 1999. So they've done this all off their own back, which is quite something. I've got to say, I recently interviewed David Tudor-Hope, and a very impressive guy he is, with his brother as well. Both started this company many, many years ago and have done extraordinarily well out of it. So I think this is a good move. They're pushed, at the end of the day, everyone's in love with NextDC. And we're quite happy to overlook the issues there, which I'm sure there are some issues. But then when Macquarie Technology comes along and starts pushing into data centers far more than they had in the past, and is raising money to do so, people start to get a little negative. The problem this one always has been, is that David and his brother do own a large slug of it, and as a result, liquidity is an issue. For institutions, it's hard to get set. If you wanted to buy 100,000 shares, good luck. So you can see this one pushed and pulled all over the place, but maybe this issue will start to alleviate some of those problems.
Yeah, Henry, just in the tech space, we're seeing what looks like everybody FOMO with Xero and also WiseTech, but there's quite a bit of corporate activity going on in some of the smaller tech companies. I think there was a bid today for one of them, and I'll have to grab the name. And
Tesseract.
Yeah, that's it, and Limeade as well. So do you think we're going to see more takeover offers coming into Australia's, well, not so large, but nevertheless, technology sector?
Yeah, I think, Danielle, one of the problems that we've got, of course, is that our tech sector is so tiny and so concentrated. Xero, WiseTech, Computershare to some extent, NextDC, Megaport, that there are very few names up there that people can buy. So when we see the NASDAQ take off like the scalded cat, we do see that FOMO coming in and people chasing, as you say, WiseTech all-time highs. Xero have pretty much doubled since their low, which is extraordinary considering the company's no longer going for growth at any cost, but now is going for cost cutting, etc. So we saw today Tesseract, which I've long followed in the cybersecurity space, being taken out by Thales, which is a French company. They are based in Australia as well. They're a big defence contractor here. They are bidding 13 cents, 176 million bucks for that one. We followed that one quite successfully from 4 cents up to 40 cents in a rush of blood to the head. And luckily, we told people to get out. And they've been languishing at around 5 cents prior to this bid. Jeff Lord and Kurt Hansen, the two executives in charge of this one. It's a good deal for shareholders. I have to say 13 cents does seem a pretty good price, and everyone's falling over themselves to accept it. So that looks like a done and dusted deal at the moment.
Those are the leaders of the day. Just in terms of laggards, it's hard to go past, of course, the materials and energy sector. I mean, I guess the best description we could find today was that there are concerns about growth out there still, who would have thought? But I mean, how are you seeing that area of the market in particular right now?
I think opportunity is what I would say, Kyle. I've got to say, straw hats in winter, etc. Everyone's chasing these tech stocks, and if you're not in a tech stock at the moment in the US or even here, it's pretty much kind of just flatlining, to be honest. Surprisingly, given the Chinese did a little bit of stimulus today in terms of that repo rate cut, so I would have expected to see a little more interest in some of those resource stocks, but I guess the oil price is telling us something at the moment. The oil price is telling us that the global demand really isn't there, and that's what seems to be driving it. Commodity prices are pretty much flat, if not drifting lower, although we did see a good day today in uranium. Paladin doing well, bouncing back from that Namibian scare. Boss Energy, a favourite of mine, one that we have in the Ausbiz investment portfolio, doing very well as well. So uranium seems to be pushing higher, maybe to do with the Oliver Stone movie that's out at the moment. And pushing nuclear power, but something that we've been writing about over the last few weeks as well.
And just on the retailers, everybody's throwing the towel in on the discretionary retailers, and rightly so, we all know the reasons why. But it's interesting, Lovisa today was up almost 5%. At some point, Henry, do you think some of these really good quality retailers just, this one's been so heavily sold off, is that a stock that investors might look to sort of start to nibble at after this retracement?
I think so. I think you're right, Danielle. I think, at some stage, some of these retailers, especially in the specialty sector, especially the ones that have got really good quality management, and especially a stock like Lovisa, which is catering for a somewhat different market. It's not the city chic, it's not the premier investments with your Peter Alexanders, it's not your high price kind of retailer. It's looking at selling, let's face it, fast fashion jewelry to probably teenagers to some extent. And that, I would imagine, not having any teenagers of my own anymore, but I would imagine that sector's relatively recession proof, because you're going to get the nag factor coming in, and also kids are working more and getting their own money, etc., and they want a little treat, especially in this day and age. So I think Lovisa is certainly one of those. Maybe today's pop was slightly technical, but certainly some of these specialty retailers do look kind of interesting and will continue to look kind of interesting. I don't think we're out of the woods yet, and I don't think it's kind of the time to buy them en masse, but certainly one or two have been oversold to a great extent.
Henry, it's going to be a big week. It was, a busy day to kick it off, so I really appreciate you giving us your time this afternoon. We'll leave it there for another day. Henry Jennings from Marcus Today.
Always a pleasure. Thanks, guys.
Thanks.
Time for the leaders and laggards, and I have a feeling that we've already gone through a few in the tech space, but let's ram that one home. WiseTech Global up 5%. You just mentioned Lovisa, so a very comprehensive, I suppose, analysis there or commentary of Lovisa and its prospects. Do you own any of Lovisa stuff in your collection?
Can't say I do.
No?
No.
Neither do I.
No.
Maybe Megaport, though, up by 4.5%, can sometimes be one that trades with that sort of, I guess, techie theme, if you will. AUB up 6.2%. But Paladin, I think it's actually above where it was before that.
Namibia, yeah, absolutely. Well, that's I think uranium's been on a tear, hasn't it?
Yeah.
The uranium bugs are out in full flight at the moment. It looks like you're absolutely right, Kyle. I think that's well exceeded where it was before. So it was about 70, a bit below that, 68 cents before it proverbially fell off the Namibian cliff. So it's more than recovered there. And as we've discussed, WiseTech, that is a real momentum FOMO trade at the moment.
Yeah, I'll say, and one wonders how far above fundamental value that's potentially stretched. Like there are everything in the tech space at the moment, but I mean, I guess it's a subjective thing nevertheless, and nearly $80. So if you're holding it, good on you. Let's get to the laggards now, and again, it's that domino story, pizza and
gold.
Dirt and gold.
Yeah, absolutely. That profit taking going on in there. Domino's restructuring, have they effectively lost that growth genie that they had, that magnet for so long? Karoon Energy, I don't know if there was anything in that story there today. Maybe that's just off the back of the energy
story,
play. Yeah, profit taking coming in there.
Speaking of stories, did you ever buy into the Domino's story that we don't sell pizzas, we're a tech company kind of line?
A bit of a stretch for me.
I never understood it, but I'm not that clever,
Yeah, I had a great chat with John Others from Bloomberg, and we discussed this whole thing about stories and narratives for investing and whether or not this time it's different. And it's definitely worth having a listen online about that one, because he's a very knowledgeable gentleman with years of experience. Yeah,
without a doubt. It was a real treat getting him on. And actually, he didn't manage to get through the full interview either. So if you want to see the whole thing, we could only get through about half of it today. So might go home and watch that over dinner after SBS World News this evening. Treat myself, It's a Tuesday.
Exactly.
Let's move on to the small caps now. And let's see what's moving on there.
Sezzle!
Up we go.
Sezzle's
is that right?
Off to...
Nah, that can't be right.
What?
Is Sezzle's $27.50?
Let me have a look
I'm
for you.
very sceptical that we could be living in 2021 if Sezzle's at 27.50. What are we looking at?
Yeah, it is.
Oh, right.
Yeah, it's up almost 12% today. Alligator Energy up almost 14%. Bannerman up 16%, and Azure Minerals. I must admit, a lot of these escape me. I don't know what's going on with Sezzle. That's,
it's funny thing with Sezzle is that it used to be just like the SEO grabbing thing. In a previous life, you used to chuck that in there in your SEO and write an article that says you just get all these. Sort of passive audience, whatever. Let's move on. Too long on that. The laggards now: BlackRock Mining, Dots, Nano, Star Pharma.
The CEO's leaving, I think. That came out last week. So I think it went up, and now it's obviously going down.
Yep, swings and roundabouts. Let's push on. Galileo Mining's also down by 9%. To what's up tonight.
Wow.
And,
US CPI, all those bugs that'll be waiting up to 10:30 to see if the markets move or they don't move.
I'm going to do it because I'm about to get stopped out on a short Nassie trade, so I'll make sure. Yeah, it hurts. Girlfriend's coming back on Friday. It's going to be probably Domino's for dinner, actually. Thanks, guys. Anyway, US CPI data, that's going to be huge. There is the expectation that it'll moderate again over the course of May, but this has been volatile, and there's sort of core and sticky indices within the overall data, which will tell us a little bit more about the direction for prices. But hey, if it comes in lower than expected, then maybe the Fed skips pauses or does whatever else it does on Thursday morning. Governor Bailey from the Bank of England also speaks tomorrow, a little later on, actually.
Right, here in Australia.
It's IOG Investor Day, ANZ Consumer Confidence, which has been pushed back a day because of the King's birthday public holiday.
Ah, right.
So,
but really, let's face it, we're going to be taking the lead, aren't we? Pretty much from what happens overnight in the inflation data. I would have thought.
Yeah, and I get the sense that if that comes in lower than expected, with the way futures are moving and the fact that there's still 20 to 30% chance priced in of a hike from the Fed on Thursday. Again, if it's weak, that gets priced out. That's another.
Do you think we're off to the moon?
Well, I don't know. I think there's a fair rally in that.
Yeah, I think you're probably right.
At least into the actual event might be to buy the rumor, sell the fact. But we've seen the odds of a 25 basis point hike in the last 2 weeks come down from 80%. So that's a lot of the reason why you're seeing kind of. I guess this move in the market that this is done for the Fed potentially.
Yeah, absolutely. I do know. I think Goldman's upgraded the S&P target to 4,500 by year end. We could be there sooner than we think.
That's 10% from here, isn't it? Because we're at 4,100 now?
No, 4,300, so less than that.
So about 5.
Yeah, so technically that's why everyone's so bullish, because we went through that 4,300 level and we've held it. But hey, we're getting ahead of ourselves.
We are. We're already talking about the end of the year. Bloody hell. Anyway, that's the day, up 0.12%. Nothing, too meaty there for us, but nevertheless, we'll take what we can on this first day of the week. And like I said before, futures are higher in the, US futures are higher. You can catch up on all the news and views on our website and app. There's a lot of great discussions today. It was a very, very busy day. Danny, what do you reckon? We call it a day?
I think we call it a day.
I think we call it a day. Okay, well, have a great evening. We'll see you tomorrow morning.
Bye.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.